All right, today we're going to unpack the numbers for the hydrogen fuel cell company Plug Power, ticker PLUG. Now, the stock just had a really big green day. But is that one single day the whole story? Well, as we're about to see in the data, it's not even close. Let's get into it. So, on its last trading day, Plug Power shot up over 5.5%. Now, if you're holding this stock, you are probably breathing a huge sigh of relief, right? A flash of green is always welcome. But here's the thing with technical analysis. One good day doesn't always mean a real turnaround is here. And that, right there, is the million-dollar question we're tackling in this explainer. Was that price jump the real beginning of a recovery? Or was it just a blip? Maybe even a warning sign in a much larger, more troubling trend. So this is the real tug-of-war we're looking at. On one side, you've got this solid single-day gain. Can't argue with that. But on the other side, the technical report is crystal clear. The stock is still stuck in a strong, dominant downtrend. So let's break that down, and we're going to start by looking at the bad news first. Okay, first things first, we've got to look past that one good day and see what's really happening under the surface. And, there are some pretty serious red flags waving. To really get what's going on, we have to wrap our heads around this one key concept: distribution. Now, this isn't just you or me selling a few shares. No, this is when the big money, we're talking huge funds and institutions, are quietly, systematically selling off their positions. And the tricky part? They often do it while the price looks okay, or even while it's ticking up a bit. And here's the thing. The data is practically screaming that this might be happening right now. Look at this. The on-balance volume, the accumulation/distribution indicator, they're both negative. That's a huge sign that money is flowing out of the stock, both for the long term and short term. And to top it all off, the money flow index is deep in the sell zone. It really paints a clear picture of some quiet, heavy selling happening behind the scenes. And it doesn't stop there. The bearish case just keeps building. You've got a whole chorus of other indicators all singing the same sad song. The price? It's struggling below those key short-term moving averages. Indicators like Trix and Williams R, they're literally flashing sell signals. Even the trend-following systems are saying, yep, this is a downtrend. I mean, the weight of the evidence here, it's pretty substantial. But hey, a good analysis isn't one-sided, is it? We have to look at both sides of the coin. So, even with that mountain of bearish data, are there any glimmers of hope? Let's flip this around and look for the good news. And right away, we find another one of these fascinating contradictions. It's like a technical tug-of-war. So yeah, in the short term, the price is below those 10 and 20-day averages. That's definitely a bearish sign. And this is a big but, it's actually trading above its 200-day moving average. Now, for a lot of traders, that's a classic sign of long-term health. It suggests the bigger picture might not be nearly as bleak as the day-to-day action looks. Then we get this number, 5.33. Now, what on earth is that? Well, this is the calculated risk-to-reward ratio from the report, and it's a really important piece of this whole puzzle. So what does that actually mean for someone thinking about investing? Well, simply put, it means that according to this analysis, the potential upside, the reward, is considered really high compared to the risk you'd be taking on at this price. It's basically a fancy way of saying, hey, there could be a lot of room to run from here, if things can turn around. And there are a few other things that kind of soften that bearish case a bit. The stock's beta suggests it's actually less volatile than the overall market, which is interesting. Its RSI, another key indicator, is just kind of chilling in the neutral zone. It's not screaming overbought at all. And maybe most interesting of all, the stochastics are in the oversold zone, and that's a condition that can sometimes come right before a nice price bounce. Okay, so let's recap. We have this really strong bearish case based on distribution and weak momentum. But then we have this bullish counter-argument built on that long-term trend and a pretty sweet risk-to-reward ratio. So how does the analysis bring this all together? What's the final verdict? Well, here's the bottom line, straight from the report. The final verdict leans heavily towards being careful. It says, quote, overall, although Plug showed a short-term rise, the strong downtrend and weak technical appearance require a cautious approach. So yeah, it sees that pop in price, but it's basically saying, hey, don't ignore all these other warning signs. So where do we go from here? The great thing is the analysis doesn't just leave us hanging. It actually gives us a practical roadmap. It lays out the key price levels you need to be watching and 4 potential scenarios for what could happen next. All right, these are the numbers that really matter right now. 278, think of that as the ceiling the stock needs to smash through. Then you have 243. That's the floor, the support level that absolutely needs to hold. And right smack in the middle at 257, that's the pivot point, the level that could decide which way this thing breaks. And based on those levels, the report outlines 4 possible futures. First, the bullish scenario. It breaks through that resistance at 278. Second, the bearish path. It fades back down towards that pivot point. Third, it could just go sideways for a while, chopping around in a tight range. And then there's the fourth most bearish case. It breaks that critical support at 243 and potentially heads much, much lower. Which brings us full circle, right back to where we started. The technicals are presenting this incredible puzzle. On one hand, you have signs that the big money is selling in a really strong downtrend. But on the other, you have a healthy long-term average and an attractive risk to reward. The data tells 2 different stories at the same time, leaving us with one final crucial question. Is plug power a hidden opportunity, or is it a falling knife you just don't want to try and catch?